Hey, good to see you here. Today, we're talking about something that could affect millions of people across the country, especially if you've ever taken out a federal student loan and haven't been able to keep up with payments. As of May 5th, 2025, student loan debt collections are officially back on. And not just any kind of collections. We're talking wage garnishment, intercepted tax refunds, and even your Social Security benefits being taken. Yeah, this is big. And if you or someone you know is behind on payments, this could really change things. Now here's something a lot of people don't realize. Even if your loans were in default years ago and you haven't heard anything during the pandemic pause, the government didn't forget. They've just been waiting. And now the clock is ticking. If you're not prepared, you could wake up one day and find that part of your paycheck or your refund just disappeared. That's why understanding what's going on and what you can do about it really matters right now. So, if you want to protect your income, avoid surprises, and take control of your situation before it gets worse, stay with me. I'll walk you through what's changing, who's affected, and most importantly, what steps you can take starting today to avoid the worst-case scenario. And before we keep going, I'd love to hear from you. Have you or someone you know been affected by student loan collections before? Or are you worried about what's coming in May? Drop a comment and share your story, even if it's just a quick thought. It helps others feel less alone and makes this space more helpful for everyone. And hey, don't forget to hit that subscribe button. That way, you'll always stay ahead of the curve on issues that matter to your money and your peace of mind. So, let's start with where things stand right now. After more than 5 years of a pause, first triggered by the COVID-19 pandemic, federal student loan collections are coming back. And not gradually. The U.S. Department of Education, under President Trump's administration, has confirmed that involuntary collections will resume starting May 5th. That means if your loans are in default, the government can start taking money from you automatically. Now, when we say default, we're talking about loans that haven't been paid for at least 270 days. And that's not as rare as you might think. Right now, about 5.3 million people are already in default, and another 4 million are behind enough that they could hit that default threshold any day now. That's nearly 10 million Americans facing serious financial consequences. And you might be wondering, what exactly can a government do? Well, quite a bit actually. Through a program called the Treasury Offset Program, they can take up to 100% of your federal tax refund. That's right. If you're expecting a refund this year and your loans are in default, you might not see that money at all. They can also take 15% of your federal paycheck if you're a government employee and 25% of your federal retirement checks. They can even garnish your Social Security benefits in some cases. And it doesn't stop there. Later this summer, the Education Department is also planning to start what's called administrative wage garnishment. That means they can take up to 15% of your after-tax paycheck without going through the courts. You'll get a notice and a chance to respond or set up a repayment plan. But if you ignore it or miss the deadline, they could just start taking the money. Now, let's talk about what that actually means for people. A lot of folks haven't had to think about their student loans in years. Since March 2020, payments were paused, interest didn't build up, and for some, it felt like maybe the problem had gone away. People adjusted their lives. They made budgets, planned families, bought homes, started businesses without factoring student loan payments back in. So now that those payments are not only back, but potentially coming in the form of forced collections, that could really throw people off. Imagine suddenly having your paycheck docked or your tax refund seized when you're counting on that money for rent or groceries. That's why this moment matters so much. What's more, many people who wanted to fix their loan situation got stuck in a kind of bureaucratic freeze. Back in August 2024, the Department of Education paused processing for repayment plan applications like income-based repayment or PAY. Around 1.9 million borrowers were left in limbo, unable to get into those plans, even if they tried. That pause is finally ending, but for many, it might be too late to avoid the May 5th deadline. Now, to be fair, there are a lot of strong opinions about this shift in policy. Supporters of the new collection efforts say it's about accountability. They believe people who borrow money have a responsibility to pay it back, and that taxpayers shouldn't be left holding the bag. President Trump has even said he wants to shut down the Department of Education entirely and move loan servicing over to the Small Business Administration, which would be a huge change in how student loans are handled. Others say this is more about punishment than progress. Advocacy groups argue that restarting collections now, without fixing the system first, is like pushing people off a cliff and blaming them for falling. One group, the Student Borrower Protection Center, even said that the administration is feeding borrowers into the maw of the government debt collection machine. That's strong language, but it reflects the real fear a lot of borrowers are feeling. So then, what can you actually do if you're in default or worry that you might be soon? First, don't wait. The longer you wait, the fewer options you'll have, and the more likely it is that collections will hit you hard. You got a few paths forward, and some of them can stop collections before they start. One is called loan rehabilitation. It's a program where you make 9 on-time monthly payments, and if you stick with it, your loan gets pulled out of default and your credit gets a fresh start. Another option is consolidation. That's when you take your old defaulted loans and roll them into a new direct consolidation loan. That loan won't be in default, and you can start over with a clean slate. So, if you're not sure which path is best for you, the Department of Education actually has a loan simulator tool on their website now that can help you compare your options. They've also expanded their call center hours, and yes, they even brought in an AI assistant named Aiden to help with questions. So, while the situation is serious, there is support out there. Also, and this is important, if you think your Social Security benefits or tax refunds are at risk, don't ignore the notices. You always have the right to appeal, and sometimes collections can be paused or reduced if you could show hardship. But you can't do any of that if you let the deadlines pass. Speaking of which, a lot of people are wondering how this will affect them long term. And honestly, that depends on how you respond now. If you take steps to get out of default, you can protect your credit score, avoid garnishment, and maybe even qualify for new financial aid in the future. But if you ignore it, the consequences can stick around for years. A default can stay on your credit report for 7 years. That can mean higher interest rates, trouble renting an apartment, even problems getting certain jobs or professional licenses. Now, here's something else to consider. Even if you feel overwhelmed or frustrated, you're not alone. Millions of people are in this with you. Some never had a repayment habit to begin with. If you graduated during the pandemic, you've literally never made a student loan payment. That's a whole generation of borrowers who are now being asked to figure this out fast. So if it feels confusing or unfair, you're not imagining it. And look, there's no easy answer here. The system is complicated. The rules change depending on who's in office. And the burden often falls hardest on those already struggling, whether that's young people just starting their careers or older adults on fixed incomes. But what is clear is that knowledge and action make a difference. Understanding your status, learning your options, and taking that first step, even if it's just making a phone call, can keep things from getting worse. So take a deep breath and take it one step at a time. You've got this. And if today's breakdown helped you feel a little more confident about what's coming and how to handle it, I'd love to hear your thoughts down below. Are you in default right now? Have you tried loan rehabilitation before? What's worked or not worked for you? Drop a comment and let's help each other out. And if you know someone who might be caught off guard by all this, maybe send this their way. It could save them a lot of stress. Thanks for hanging out with me today. Stay safe, stay informed, and I'll see you in the next one.